With the rapid appreciation that we've had over the last year and a half, 2 years, a lot of people are asking about getting rid of their private mortgage insurance. And so I wanted to address a couple of scenarios. The first, let's address, is FHA. So with FHA loans done recently, the mortgage insurance is on the loan for the life of the loan. But there are a lot of those loans that can now be refinanced into conventional loans, and a lot of those homes now have 20% equity. Even though you bought with a 3.5% down payment just a couple of years ago, you could now potentially refinance into a conventional loan with 20% equity and no mortgage insurance. So that's probably the best option with an FHA loan. Now, if you have a conventional loan, the rules are different. So your mortgage insurance is going to drop off automatically when you reach 78% of your purchase price. You can appeal to have it removed once you reach 80% of your purchase price. If you want to use your appraised value, it can still be removed, it's just not automatic. So you can do it two ways. The first would be reaching out to your mortgage company, your servicer, and asking them to look into getting it removed. They will most likely order an appraisal and determine what the value of the home is, and then whether or not you're eligible. That eligibility is going to be somewhat dependent on lender-specific guidelines. But if you are a client of Guild, we can remove the mortgage insurance if you are at 75% loan to value, so 25% equity, and you have made payments for 2 years. If you have made payments between 2 and 5 years, that mortgage insurance can be removed off the appraised value as long as you're at 80% of the appraised value or you have 20% equity. The only exception to that is if the appreciation is due to considerable improvements to the property. So let's say you bought a property that was not in great shape and you did a lot of renovation to bring it up to really a completely different home, then we could look at removing that mortgage insurance within that 2-year period just based on appreciation. The other way, of course, is with a refinance. But if your interest rate's great and you don't want to do that, contact the servicer and find out what their specific rules are.